Let me just welcome our viewers to this broadcast. Thank you all for joining us. We are going to talk about the Union Budget 2025. What does it have for the common man? Is it boosting growth? Does it have enough for a growth stimulus? Is there enough government expenditure? Is there enough money in the hands of the common man, in the hands of the middle class? And overall, what are the sort of priorities that the government has set with this budget? Joining me is Mr. Subhash Garg, former finance secretary, one of the most trusted voice on these matters. Mr. Garg, good afternoon. Thank you for joining us on Free Press Journal.
Thank you very much, Afrida. It's a pleasure.
So let's then begin with the Union Budget 2025 and the reactions that have already come in thick and fast. We have a lot of people, of course, from the other side of the political divide, questioning the government's priorities, saying that just simply having a tax slab modified to help those who are earning up to 12 lakh is not just the only thing that the government can get away with as a huge reward or a prize, because there are a lot of other sectors which does not get enough, or there isn't enough, so to speak, to boost employment generation or to boost to give a stimulus for growth. Your thoughts, sir?
So there are three questions in what you said. Number
Yes.
one, about the major big ticket announcement of today about giving the income tax concessions, making the income below 12 lakh literally free of income tax and all. So that's, I think, I'll address that first.
Sure.
That is, to my mind, a very desirable movement forward, but it's not a complete movement.
Okay.
There are about 3 crore taxpayers who actually pay taxes in the country. There are 10 crore who files the returns, but 7 crores were earlier covered by the 7 lakh limit, and they were exempted from the income tax paying. What finance minister has done is that she has extended that 7 lakh limit to 12 lakh limit now to make it free. Now, how many of and she has also made the tax slabs more reasonable as far as the new scheme people are concerned. She has raised the 30% slab to 24 lakhs, which is very desirable. Now, with these two kind of concessions, the 12 lakhs is what you are completely exempt, and to 24 you get the rate slab, rate reduction. Now, how many people do actually benefit from it? So there are the kind of people who will go for this is the ones who don't have other exemptions to claim. There are 4 or 5 major exemptions which were people claiming, and they were in the old pay scheme. The house rent, the interest on loans taken for houses, the LTC, the medical, etc. So those are the reasons which the people were keeping out of the new tax regime. Now, of course, some of them will calculate now that if you shift to the new regime, their loss on account of not claiming those exemptions would be lesser than the benefit which they get. So 2 points here. Number one, that what was shown that every taxpayer in this slab up to 24 lakhs would get from 80,000 to 70,000 or 1,10,000 rupees as additional money in their hand is not true, because you have offset this for what the exemptions which you're claiming and which you will not be able to claim now. So that is one. Second, how many of these 3 odd crore taxpayers will shift to this? I think jury is out. Everyone will have to calculate. But my assessment is that it's about 40 to 45 lakh maximum number of taxpayers who might get benefited. So it's not whole of the world which is getting the benefit. So it's not.
So by that logic, Mr. Garg, then it will also be true that it's not as if a whole chunk of the government earning is impacted. A very small amount in the overall picture, because questions are being raised, then where is this revenue going to come from, since bulk of the government's earnings come from the taxpayers revenue? If you have cut it, when is that adjustment being made? Is there a hidden factor somewhere that you can tell us about?
This is a very interesting question. If you look at the tax growth
Yeah.
expected or estimated for the next year,
Hmm.
for the income tax, still the growth expected is the highest, right?
Yeah.
So corporate taxes will go up from something like 9.8 lakh crore to 10.2 lakh crores, a growth of less than 5%. Whereas the income tax is estimated to grow by about 14 to 15%. Now, that tells you two things. Number one, either you are actually showing that there would be 1 crore, 1 lakh crore loss, and actually there would not be any loss. Because as I said earlier, if you take into account the exemptions which will not be available, the actual outgo would be much smaller. So I think that is one thing which, to answer your question, whether something is hidden somewhere. So this is one where actually I think the government doesn't expect the income tax loss to be anything more than
Very
maybe 10,
substantial.
15,000 crores. Second aspect to it is that as the taxes are growing lesser, barring income tax, the total other taxes are expected to grow by only about less than 10%. And therefore, in such a situation, you are also consolidating fiscal deficit. In such a situation, either you've not put any additional taxes. The only way available to you is to reduce expenditure, and that is what the fact is, that the expenditure budget for the entire next year, including
Yeah.
capex, is
Yeah.
growing by 5%.
Yeah, which is not a good sign for growth stimulus, would you say? I also want to ask you about fiscal deficit, because the moment you say the earnings, this sort of a balancing act is being played again, there are concerns around what is the sort of fiscal deficit, what is the sort of borrowings that the government will have to do, what is the national debt, and if the capital expenditure is not increased, that will have its own fallout.
So it is axiomatic that people
Hmm.
assume that the capital expenditure will lead to more growth. Right. I think
Yes.
the more nuanced view you take, you will
Hmm.
go into whether that kind of capital expenditure is actually leading to growth. For example, if you put money into BSNL for paying for its losses, or
Yeah.
you make a lot of investment in railways without there being any increase in the passengers, that does not really augur well about the growth. But leaving that apart, the axiomatic that capital expenditure leads to growth, if we assume that, and when the capital expenditure is being reduced or it doesn't grow any longer, there is there is definitely a sort of decelerating impact on the growth. It's very and it can be very well seen. The fiscal deficit story is little more complicated. We
Okay.
have come to believe that 4.5 or 5 or 6 is a normal kind of fiscal deficit for the country. It's not the case. Our
But this time
tax-
estimated to be 4.8. So that's also a difference of a few
no,
points
so
here and there.
4.8 is the for the current year, 4.4
Yeah.
for the next year.
Yeah. Yeah.
But still,
Yeah.
it's still very high. It's not
Yeah.
low. It's higher than our FRBM, our legal, our statutory limit of 3%. So
Hmm.
fiscal deficit consolidation is taking place, but from a
Yeah.
very high pedestal. The realistic right kind of fiscal deficit is a far away.
Hmm. Hmm. So then, explain to us, these sort of figures, because not everyone is so financially literate, and a lot of people want to understand when figures like this are thrown at us. Gross market borrowings at 14.82 lakh. What do we make of it? How is it helping us?
The market borrowing is what the government borrows from the market by issuing the government securities.
Hmm.
So you issue 10-year bond, of 15-year bond, or 30-year bond, and the LICs, banks, others, FPIs subscribe. There is very little retail participation in the government's borrowing program. very
Hmm.
small, but some people have started, but largely it is institutional, which
Okay.
provide the loaning to the government. Gross
Hmm.
market borrowing would mean that whatever it comprises of two things. Number one, what is
Hmm.
your actual net borrowing requirement, and what do you require for repaying the maturing government securities. So 10
Right.
years before security was issued, which becomes mature now. So it is not the gross market borrowing which affect the
Hmm.
market. It is the
Okay.
net market borrowing which affect the market more. And
Okay.
that number is higher than last year. It's about 11 point some lakh crore. So
Hmm.
as much of the resource would be raised by borrowing from the market. From the business perspective, it means that if the government, which is the highest rated borrower, if it borrows a lot of resources, the resources available for other businesses and individuals and households relatively come down. So if the government borrows less, which is inverse of the fiscal deficit in a way, if you run
Hmm.
lesser fiscal deficit, you borrow less and you leave
Hmm.
more for resources for the private sector.
Right. But, talking about how the government is trying to facilitate credit accessibility for the farmers, for instance, the Kisan credit cards for 7.7 crore farmers, limit enhanced to 5 lakhs, the MSME, for example, where term loans up to 20 crore will be given, customized credit cards with a 5 lakh limit for micro enterprises registered on Udyam portal. Are these measures you feel that will boost confidence in people that there is going to be more cash in hand? We are not just talking about tax here, we're talking about other credit facilities as well.
So these are all the credit facilities for productive purposes. If it
Hmm.
is a crop loan through KCC, the farmers are expected to use that for buying inputs and other things for cultivating their crops. That's the whole purpose. Likewise, the
Hmm.
MSMEs, they need borrowings for setting up their business, working capital, and other kind of things. So it is good that their requirements are met by the
Okay.
board. The government has introduced is a kind of element of a guarantee from the government
Hmm.
that you if you default to the bank will not suffer. That MSME kind of loan will be part of full repaid by the government. It's a dicey situation. Normally, the loan should be extended based on the commercial judgment of the bankers that this loan is worth making or not making. Whenever the element of guarantees are introduced, there is a implicit understanding that perhaps that loan may not be repaid, and somebody need to sort of assure the banks that okay, if you are not paid, we will pay. So I think these have expanded. So the crop loans and the MSME loans in last 5 years and even before have actually expanded quite a lot, which is good thing to happen, but it's not enough in the sense that if it is the real expansion is the commercial expansion. If it is
Hmm.
made commercial considerations, factoring the that is where the risk of not paying back actually
Hmm.
gets reduced.
Yes, I want to ask you a couple of last questions. One on the employment generation. Uh, how do you see this budget helping address underemployment and unemployment in agriculture sector? The government promises the matter is addressed. 1.7 crore farmers will benefit. But then the overall poor employment generation has been a concern in this country. Growth in the absence of employment generation is something we keep hearing. Has that been addressed adequately?
See, this was quite surprising. I didn't find the employment being featured prominently in the budget at all. Last budget was employment focused. Those schemes announced, PM Rozgar Yojana, those have not been implemented.
Hmm.
The economic survey had brought out one thing very starkly, clearly, that in last 10 years or 12 years, the real wages for everyone, literally everyone, whether it's salaried people or whether it is wage earning people or whether it's self-employment people, for all of them, the real wages have declined. So that's a real kind of thing, because if the real wages decline, the consumption decline, the prosperity or welfare of the people decline, how do
Hmm.
you do that? it's not an easy question to answer. By only raising the number of employment number, or
Yeah.
those who are in the employment force, labor force, that doesn't help. What actually helps is what is the your real wages. From that point of view, it didn't appear to be anything in the budget. I think
Okay.
last question I have to leave.
Okay, that's important, and yes, it does give us a interesting perspective as well. But I want to conclude by asking you that when you look at the overall geopolitics, no nation exists in isolation. There is interdependence, and there's been a very significant regime change with our trading partners in US in particular, with Mr. Donald Trump coming in. I also understand there is a heavy reliance on the supply chain in China, and there are these adversarial forces that India is, of course, caught somewhere in that as well. Has the budget tried to accommodate, or you would say understood, taken that in consideration as well, given that Donald Trump has come up with some very startling remarks on how his trade relations with other countries are going to be like from here on?
I think there are two big facts which we need to keep in mind. As far as US is concerned, it's our largest trading partner. We have a lot of surplus with the US, and if something happens there uh, on the tariff front, or other kind of restrictions or concessions, whether it's in name of BRICS or otherwise, I think that
Yeah.
will affect us somewhat adversely. And how do we deal with that? That's more of a political kind of question rather than a very economic kind of question. So that's one. The second thing
Mhm.
is the big China factor. I think today,
Yeah.
if you look at the future manufacturing, whether it is the renewables or energy transition, electric vehicles, solars or otherwise, or in the computers, digital space, critical mineral space, and other things, everywhere the Chinese have the most advanced technology. They have the largest capacity. The economic survey again very starkly brings out that in most of these spaces, for example, wafer, the global 90% capacity plus is with Chinese, and we have no. Unfortunately, we have stuck ourselves into a corner that we will not have investment from China. As a result, we end up buying a lot of things from them, importing. We have no investment in the country, from China. I don't know how we can evolve our strategy, that we learn how to do business with China, including investment in China, because that is where the technology is, where the
Yes.
capacity is, where the investment is. If we
Hmm.
don't do it, we keep on harming
Yeah.
ourselves. Thank you.
So how do we insulate those business interests and keep it away from the raging politics of that goes on between nations? That's a very key question that you raised. Thank you so much, Mr. Subhash Garg. But as you leave, I want you to rate the budget. How much would you give it on 10?
I do a very detailed rating exercise. In fact, I write a book every year now.
Okay.
This is explanation and commentary on budget. It's a very
Yeah.
detailed, comprehensive book. In
Yeah.
that, I do a rating also. So I will have to do all those number crunching to come up with
But
that
given
rating.
that we have seen so many budgets, eight of Nirmala Sitharaman, prior to that, Mr. Chidambaram, Dr. Manmohan Singh, who we lost last year, uh, anything striking that you remember out of those budgets, and any comparative analysis that you would like to do
See,
from the
budget is
budget?
better rated on the numbers, the
Okay,
fiscal side of it. Of
true.
course, you can do it on the policy as well, but
Hmm.
policies are not very regularly announced. It's few and far between, only
Hmm.
sometimes. So I do the rating on the quantitative aspects of the budget, how fiscal deficit, how is your revenue shaping up, whether the expenditure is on the desirable side, is the fiscal markmanship better, all those kind of things I take. There are 10 major criterion based on that. So I would
Okay.
suggest that if you want to do a rating specific sort of
Yeah.
interaction, let the buck book come for the for 25, 26,
And you
and
promise
I'll
to join us then with your book, with the figures.
very, very happy to do that. Right.
Thank you so much, Subhash Garg, for joining us today, for giving us your views on the budget
All
2025.
the best, Steve. Thank you.
Thank you. We continue our coverage. We'll give you all the important inputs that are coming in on the union budget. Do stay on and do continue to subscribe and also put in your comments on Free Press Journal. We end this live stream here, but do go and check all our videos, all our explainers. If there were terms which you found difficult to understand, say fiscal deficit or capex or debt to GDP ratio, these complex financial terms have been simplified in our series called Mini Splainer. Go check that out as well on the YouTube page of Free Press Journal. Thanks very much for watching.